Can you name another financial statement? Just in general? Statement of owner's equity, and that's not a good, that's the worst choice, I think. Statement of cash flows. And will it influence statement of cash flows? Yes, although I don't know how much you know about the statement of cash flows or how much you've actually learned. You know a lot about statement of cash flows?
I've had it.
What's the first number on the statement of cash flows? Net income. Net income. And so if it influences income, it's going to influence cash flows. But it's a little kind of, yes, a little less direct. Okay? Very good, very good, very good. So which financial statements, on what financial statements do unit costs appear? Income statement, balance sheet, statement of cash flows. Okay. Why are manufacturing costs accumulated in inventory, Erica? What principle from some of your financial accounting classes do you think would be the reason for why manufacturing costs are accumulated in inventory? Because we've already established, right, that the cost of the shirt hangs out on the balance sheet in inventory until it is sold. So why? What principle? And I'm trying to be helpful here. What principle? I bet you recognize it when you hear it. Nick, what are you telling her? No, that the going concern principle? Matching, the matching principle. Don't let her distract you.
Matt said she took my answer.
Did she? Shame on her. The matching principle, okay? The matching principle is the reason why, we match, what do? We match revenues with expenses. So when does the cost of the shirts come off the balance sheet? When they are sold, therefore we match. And specifically, do we match all costs? Do we match all expenses when units are sold? We match specifically one type of expenses, don't we? What type are those? Product costs. We match product costs. What do we do with period costs? When do we recognize those on the income statement, Victoria? In the period in which they are incurred. Okay, so the matching principles. So the matching principle is why we accumulate costs in inventory before they are sold. Why is the absorption costing income statement format GAAP? And I remember literally the first time I asked that question in class, it was kind of that came up. Somebody asked something, it came up. So I was like, what do you all think? What do you all think? Why is, because there's two income statement formats, right? Absorption costing income statement format and variable costing income statement format. So why is absorption costing income statement format GAAP? And I remember I first asked this question at the last university I was at. And randomly, the only time in my 5 years there, I asked the question, and literally immediately, my department chairman walks in the door. And it's the only time he ever did that during class while I was teaching. And I was like, and it was incredibly convenient as far as I was concerned, because I was like, Mr. Fowler, what do you think? Why is the absorption costing income statement format GAAP rather than the variable costing income statement format? And he tended to hunch over just a little bit. So he's like, that's a really good question. And then he left. And in, out, poof. And so, but talking about it, it seems like the reason the absorption costing income statement format is GAAP is because it matches better, which is why I brought up the matching principle. It matches better. More costs are matched when you use absorption costing than when you use variable costing. Specifically, what is matched using absorption costing that is not matched when you use variable costing? No, it's a specific piece of cost of goods sold. Sorry? Anybody have an idea? Anybody? This is a great opportunity to show off. Fixed manufacturing overhead. Fixed manufacturing overhead. Fixed manufacturing overhead is included in cost of goods sold in the absorption costing income statement format, but it is not included in inventory on the variable costing income statement format. And we'll encounter that a little more thoroughly in just a little while, or not later in the semester. The absorption costing income statement format, Alex, what is it? I shouldn't even have to write anything on the board now. This is absolute review. Absorption costing income statement format, what is it?
Revenues minus cost of goods sold equals
gross margin minus selling and administrative expenses equals.
Operating income, and can you do that without looking?
I was looking at you the whole time.
I'm not real sure, because
I mean, I have peripheral vision, but not that good.
revenue minus cost of goods sold equals gross margin minus selling and administrative expenses equals operating income. Oh, Jim, do you know the variable costing income statement format? No, Jackie, can you help him?
Revenue minus variable cost equals contribution margin minus fixed cost equals operating.
Yes, revenue minus variable cost equals contribution margin minus fixed cost equals operating income. Very good. And so those are the two statements. Isn't it nice to have just a little bit of review? I mean, now you can feel like, you should feel like you've learned something this semester. I mean, Jackie, she had it written down before I even asked her what it was. So you can feel like you at least know that. And you should know what income at break even is. Right? You should know that. So you've learned at least a couple of things this semester. So how can unit cost be calculated? How many ways, Shar, how many ways can we calculate? 3. Very good. So now we're going to encounter those 3. Okay? Job order costing, process costing, and then across the top, activity-based costing. Okay. Job order costing, process costing, and activity-based costing. Okay? So far, so good. Now, what I want you to realize is this. I want you to think of this as a continuum. Okay? It's a continuum. This whole thing is kind of a continuum. And it's a continuum from, let me use a different color. It's a continuum from distinct products to homogeneous products. From distinct products to homogeneous products. And then what happens is we then choose our costing methodology based on our production methodology and the products that we are making. So a company that produces distinct products, and we'll talk about those with examples here in just a moment, would use job order costing. A company that produces homogeneous products would use process costing. And activity-based costing is across the top with this bracket, suggesting it can be used for a company anywhere along the continuum. Gesundheit. It can be used for a company anywhere along the continuum. Okay? So let's talk about distinct products. Distinct products are things that are distinct or custom made. Okay? So examples would include things like home construction. Anybody ever worked in construction here in the room? When you go to work, what do you go to? What kind of site? Job site. Job order costing. It's the same word. It's the same word. Job order costing, job site. Okay, so home construction would be an example. Anybody ever hear, let's see, oil well drilling. Very unique. Yes, ma'am. Oil well drilling.